I guess at the end of 2015, when they created this new group, portfolio construction group of teachers, and I was head of asset allocation and portfolio management, which ultimately was responsible for and we were trying to figure out, well, we're gonna try rethink total fund portfolio construction, everything to do with asset mix, stock, bond, commodity, factor exposure, hedging, alpha, beta, liquid. And active budgets to the departments, and we have to think about this. And at the end of the day, we kind of went look, how? And this was just my thought process. Was how? There's so many incredibly smart people at teachers, and right now, my very first committee meeting, and you had all these committee meetings, and this is just kind of the way a bunch of investors will tend to get together. Here's how a typical committee meeting goes: is that it's like an FX committee or an EM committee, and they get together and someone promotes pitches something and. There's 15 people in the room because there's a lot of people want to get involved in total fund, which is fantastic because it's great that people are wanting to get involved and want to contribute. And so you have 15 people in the room and someone pitches something, there's a bit of discussion, some questions are asked, and then there's a vote. And I just couldn't help but think, I read Tetlock's book, I thought about it a bit, and I was I couldn't help but think there's got to be a better way. Because there's a lot of problems with this. Because the first time we put something on, 15 people voted, we all approved it, but who owned the risk? It's well, that was me. I was the throat to choke on that decision at the end of the day, and I went well, we've got to think about this a little bit because, here's a bunch of the challenges. I got 15 people in the room, but maybe I only heard from 2 or 3 people. And whenever you have a bunch of people together, it's the noisiest person, which is me most of the time. But it's the noisiest person, it's the loudest person, it's seniority. What did the boss say? And so there's a real art to collecting the independent views without contaminating them, right? So that's the first thing. The second thing is accountability and ownership. Who owned it? People put this trade on, but at the end of the day, if it went south, there was a whole bunch of duck and cover, right? And so because he didn't actually own it and didn't feel a sense of ownership and accountability. And then the third thing is how do you get off it? When do you end it? What's the process for that? How timely is that? Do you have these meetings every 2 weeks, and every 2 weeks you go, are we still good with this or not? And so I was thinking there's got to be a better way. And so the way I thought about it was can we capture this information in a timely manner with accountability and oversight and alignment? And so what we spent a lot of time sort of thinking about and working towards was a framework. It's what happens if we put a trading game on people's PC, right? And this trading game had a bunch of assets that you could buy or sell. And if someone pitched a trade, you could add that as an asset. And basically everyone then could say, do I want to buy this or not? So you own it. But here's what had to happen for it to work. You had to have some sense of responsibility and accountability, and you had to care. So I said, people have to get paid on this. You're asking people to take a risk and to put their hand up and contribute to the total fund. But if they went, we should buy stocks versus bonds, or we should buy IG versus high yield, or those trades, can we wait to put them into a system where someone owns that as a bet, but we're not actually putting the bet on, because this is the problem. Because if a bunch of people like credit and a bunch of people like equities, they go maybe I've got too much equity factor at the fund. I don't necessarily want that exposure on. I want to put that into a portfolio construction framework and think about what. But I have the information captured. But the key feature is this: if 1.5 days in, someone says, "Yeah, we should be long energy here," when I don't like crude anymore, they sell it. I have real-time, instantaneous feedback of what the person actually believes.
High quality information.
High
that
quality,
you may not use.
That I would never get.
And independent.
Cost you some money.
Timely, independent. And so this is I felt this is the way to capture all of this, really market knowledge in the fund, and who wants to put their hand up and play? And a bunch of people did, and it was juniors, and there's a couple of problems came up though, which was we couldn't comp people differently. That's an entire HR discussion, and but hopefully they get involved anyway, just because it's their job. But a lot of people went risky and no benefit, maybe not, but a bunch of people still did. The second question was, is it anonymous or not? What happens if I look like an idiot because I got it completely wrong? What happens if I went against my boss and I got it right and he got it wrong, or vice versa? So the question is, do you make it anonymous or not? And that becomes yes, you could, and then maybe not. And you could maybe anyone who wants to can play. Do you let people in back office or in finance play? Sure, I guess, because we're taking these signals in. We can weight them however we want. You're capturing information. Maybe ideas come from anywhere. But really, if I
in a weird way, aren't you also risking just giving them a free call option? If you're going to compensate them on the upside, but not penalize them for making bad calls, unless their job is going to be on the line, it's why wouldn't I just gamble on high risk plays?
Isn't that just investing at a pension plan, though? I mean, I'm going to get in trouble for saying that.
You tell me.
Anyway, but to take it away, you say, so you take the high risk ones. That was an exact part of it. It's well, wouldn't I just take the most volatile thing? It's well, of course, I don't want you to do that. So I'm going to give you the unit that you're buying is a vol targeted unit. because I don't want you just to play a high vol versus low, because yes, you would then take the highest vol thing you could and expect on expectation to get paid out. So vol unit targeted, which is a little bit difficult to explain. I don't want you to bet on 100 things. I'm not looking for your portfolio construction. I'm looking for your ideas. So limited number of trades. I don't want the high frequency in and out everyday signals. I want the long-term hold. So we had to charge like a significant enough bid ask to make it, And so we thought through like a lot of these challenges and a lot of these problems. And ultimately I think it didn't really fly. And I think that the main challenge, and there was a bunch of challenges, like I said, there's compensation challenges, there's getting people involved challenges, but like there's also a lot of pushback from senior team kind of going like, this is my job. Like, I'm the guy. We're the people making these calls. I don't want to have to do what they tell me to do. This is my job. And I think it was just funny because I heard Andy Duke say the exact same. I was sitting there nodding, he goes it turns out these betting processes, if you can make them independent and anonymous, you can collect the information. And I think this was even better because it was real time and properly accountable. But if you can do that, it does tend to do very well. But the issue is challenges in org structure and a sense of authority and a sense of delegated responsibility. And some people are going like, well, why wouldn't you just give us the money, we'll trade it in our book? And it's like, well, because I don't know what we want to do at the portfolio level. We're capturing information, not necessarily responding. Anyway, it was a very. I thought it was really cool. I believe the software is still somewhere over there, but I'm not sure it's being used.